Good morning. Happy Friday, everybody. Welcome to the educational room. I'm a minute early. We'll give you guys a second to file in. Good to see you guys here today. Hope everybody's doing well. Hopefully today's market gives us that same action it gave us yesterday. Man, that was a lot of fun, wasn't it? There was so much going on. S&P was like an ATM machine. Enjoyed the heck out of it. Guys, my name is Mark Novak. I'm going to walk you through the day. We're going to do it a lot like we did yesterday. We're going to spend a few minutes talking about rules, getting a basic foundation. But I want to remind you guys, from the Nexgen software services, when you go to that, our little section of the world on YouTube, excuse me, I'm going to give you the link right here. This is a link to the streams. The first hour of each and every one of these videos, with the exception of the one that says John Novak, CEO, live room, covers high probability trend trades in very great detail for the first 30 minutes of each and every one. So if you want to review those rules, really get them in depth, follow that stream. Go over to the live section on the YouTube channel, and you can get the same 30-40 minute message 50 times, and then each classroom progresses from beyond that after, where we start looking at the live charts, where we start looking at your charts. One of the things that I like to encourage everybody to do is participate. Guys, post your pictures, ask your questions, put me through the ringer. The more you ask me, the better off you are. The more pictures that you post, the quicker you're going to get to where you want to be. So with that said, let's go through our morning routine. Let's go to forexfactory.com. Put that link in the room for you guys. This is just a news source for news releases that may impact the market. They're labeled by day and they're labeled by impact. There are low impact news, which traditionally doesn't always have a large impact on the news, but it has the potential to. And typically what you see when you get a news release is, as a Nexgen user, we only have two options. Either our rules are met or our rules are not. When the market moves erratically or unpredictably because of a news release, it may affect how our rules come into play, or maybe our management plan. So when there's a news release, I like to, go refill my coffee, grab a glass of water, text my kids, whatever. Today we had low impact at 8:30 a.m. If you were watching the market, you noticed that there was very little impact on that market. But at 10 a.m., we've got a big one. We've got the preliminary UOM consumer sentiment. Guys, I don't know what that is. I don't have to know what that is. What I do know is that this red box means that that market might go a little crazy at 10 a.m. So I'm going to set a timer on my phone, or I'm going to put a sticky note right on my monitor and make sure that I'm not in the way of that potential freight train. And that's really what we look for in news. And then we're going to head over to the Fibonacci day trading Nexgen Software Services website. I'm on the education page right here. University of Michigan. Is it really, Gary? Or am I being gullible? Okay. I wasn't sure. Good morning, Safia. Nice to see you this morning. Your little avatar cracks me up every time with that. It looks like a penguin or something with a book on its head. I don't know why I find that so funny, but I do. Guys, the education page is going to give you two important links regarding Nexgen. The first one is a software user guide. If you are brand new to the software, maybe you're brand new to NinjaTrader, this is going to help you out an awful lot. This is kind of your one-stop shopping for troubleshooting NinjaTrader, or all the basic functions. Opening NinjaTrader, connecting to your live data, moving and scaling your charts, setting up stops and targets. If you're interested in cryptocurrency, there's a great section on that. How to add microcrude to NinjaTrader 7 if you need to. Market replay, how to use it, how to build your skills outside of market hours. Adding symbols, rolling contracts. We're going to cover that one next week with crude oil. Building new charts, applying templates, moving the dots over your bars on market flow. All of this stuff is one click away for you if you have a question about NinjaTrader. Of course, I encourage you, post your question in the room. If you're just struggling a little bit, you're like, man, I can't seem to figure this out. Chances are I've broken it a couple times over and know how to fix it. And guys, if I don't know how to fix it, I'm going to point you in the direction of Jason and Tech. I've said it, I think I say it every day. The only things that Jason can't fix regarding Nexgen are things that aren't broken. So don't be shy when you're looking for a little bit of help. The most important thing on this whole page, though, I believe, is using your screen capture program. Guys, this is my open invitation to anybody that's brand new, anybody that's on demo, or maybe anybody that's been sitting on the sidelines, maybe a little nervous about posting in the room. Well, what if I don't look smart? What if the trade I took was wrong? What if I didn't get in at the right place? What if I didn't get out at the right place? Well, guys, guess what? Congratulations. That's exactly what I'm hoping for from you. I want you guys to make mistakes in the beginning, and I want you to make the mistakes because if you do, and we have this conversation via pictures, we're going to fix you. We're going to fix the mistakes you make. We're going to talk about what you see, and I'm going to take a picture. And you know, I got ahead of myself. I'm going to use this capture software. It was downloaded when you started the demo. If I click that big red capture button, if I hover over just one chart, you'll notice that only one chart is going to take a picture. But if I click and drag from the top left to the bottom right and release the mouse, I get a couple options. I've got a camera option where I can take a picture of the trade that I've already done. And guys, this is an option that I think everybody should use. You can actually capture a video. You can, from the moment of entering the trade until the moment you exit the trade, you can videotape and you can talk yourself through the trade. Guys, this is one of the most valuable tools you can do. We may do it today just for the fun of it. But right now I'm going to capture an image and it's going to bring up an image preview. And there's a couple things that I want you guys to do when you post a chart. There's arrows that we can point out areas. There's shapes where you can point out things that you find significant, but it's this call out button. With this call out button, you're going to write your rules on your chart. And why are you doing that? Well, one of the reasons is it lets me know that you know what you're looking for to get in. It gives me the idea or the understanding of why you entered a trade, so I can give you the best feedback possible. I'm here 15 hours a week, and my only goal is to give you guys feedback. Write your rules on your chart. Write how you feel. And a couple key concepts that I really need. Show me your entry and let it line up on the 13.2. So make sure that when you show me a trade, you're showing me where you got in on the 13.2 and you're showing me where you got in on the 5.1. And if you do this with each and every chart, I'm going to be able to give you the best feedback possible. Once you have your information on the chart, you're just going to click an upload button. This upload button is going to give you a link to screencast, and this is putting that picture in the cloud. If I copy that link, guys, I can come over to the chat room. If you are in the pop-out, you need to hit Control-V to paste in the room. If you're not in the pop-out, if you're in just the Discord room, you can paste directly. You can also, if you don't want to go through that screencast link in the moment, you can click this copy button. And then once you click that copy button, you can actually paste the picture directly in as well. Either one works, but I can tell you from experience, the person that posts the most gets to where they want to be the best. So if you are brand new, guys, I'm going to put it out to you right now, and I know I've got some new folks in here. Take a picture of your charts. Let me know what you see. And just post one in the room and call it test or call it picture post or whatever you want to call it, but let me know that you're capable and willing, and that helps me out a lot. So the next section is going to be the educational section, guys. This is your tutorial. If I click start here, it's going to bring up the tutorial section, guys, and the URL on the tutorial section says building a foundation, and that's exactly what we're going to do. Is we're going to build a foundation, guys. We're going to focus on the absolute best of the best in the beginning. For the first 30 days, we're going to talk about high probability trend trades, trades where every indicator lines up for the trade, a trade where your triggers are the strongest, where there's nothing in the way between you and your target area. And if you focus on this trade for the first 30 days, we're going to talk about it a lot today. It's going to do something for you, which is, it's great. It's an education that you can never lose, and it's an education that grows exponentially each and every day you look at your charts. And it's just chart reading, because 90% of what we do is going to be reading charts. 10% of what we do is waiting for the advantages that that chart reading gives us so that we can look to enter a trade. And chart reading incorporates three essential elements. It is going to be you opening your charts, looking at your indicators, and understanding where the market is likely to continue. And we're going to use that continuation point for entries for these high probability trend trades. Where the market is likely to go is going to help you when deciding where to put a profit target. And then finally, you're going to understand where the market is likely to stop. And that's going to help you with rule number 2, identifying areas where the trend may end so that you don't take that last trade in a move only to have the market reverse on you and stop you out. So we're going to focus on one trade. This one trade has 3 rules. And these 3 rules are going to come together on only 2 charts. Allow it to be simple. Give yourself permission to be a student for a little bit. Most of you in this room have been successful in your chosen careers. You're accustomed to being the person with the answers, not the questions. I want you to pretend like you're brand new. I want you to pretend like you're just learning the software, and I want you to be like a wide-eyed kid. Just everything is brand new, soaking it in. Ask why, ask how come, ask all those questions. But we're going to start on a 13-2 chart. 13-2 chart is the largest chart in these 2 chart setups. It's like a broad stroke of a brush. It's giving you an overall look of what the market is doing, and we're only going to use the most current bar to determine quite a few things. With this most current bar, we're going to understand the trend of the market. We're going to look at the background of the 13-2. If it's green, we are in an uptrend and should only be looking for rules to be met for a high probability trend trade long. And if it's red, we're in a downtrend and we're only looking for rules to be met for a high probability trend trade short. We're going to trade with the trend, and that's going to be one of the first advantages that we provide ourselves when we're looking for the high probability trend trade. Also on the 13-2, rule number 1 has to be met on this larger, slower chart, as well as rule number 2. And we're going to discuss these rules in great depth. But rule number 1 says that we have to have strong triggers. There has to be momentum behind this potential trade. And rule number 2 lets us know that there shouldn't be anything in our way. No Fibonacci areas, nothing that says this market has the potential to bounce to reverse. All of this happens on this larger, slower chart. And when these rules are met, these first 2 rules are met, we're going to come over to the 5-1 chart. And the 5-1 chart is just an entry chart. It's going to allow you to pinpoint with amazing accuracy where the market is likely to continue. And this is where rule number 3 comes into play. We're just going to use a limit order. We're going to buy or sell a pullback. We're going to be so good at recognizing where it's likely to continue, we can let the market come back to us for entry. We are going to use these Fibonacci areas for entry. They're going to be inside of large triggers that are favorable, letting us know that there's momentum behind the trade. And by doing this, it's going to allow us to reduce our risk, but we're also going to maximize our profit potential. And those 3 rules are simple. I've got them right here. I'm going to put this one in the room. In the tutorial section, they're a bit more wordy. I'm going to go for 100% simplicity. In order to take a trade, we must have strong triggers, we must have no termination conditions, and we have to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Only 3 rules, only 2 charts. The first 2 happen on the 13-2. When I think of rules, my rules have to be proven, which means that I know without question that these 3 rules provide me an advantage. These high probability trend trades are trades that have the potential to win 70 to 80% of the time. Each rule broken down individually provides me an advantage. Strong triggers is going to provide me the advantage of momentum. No termination conditions lets me know that I have the advantage of a clear path. And then using that limit order to buy or sell a pullback at an area inside of favorable large triggers gives me the advantage of recognizing where the market is likely to continue and entering there. So when I think of the 3 rules and I think about the advantages, these are the advantages that I insist on to pull the trigger. And if I'm breaking my rules, if you're breaking your rules, let me rephrase that, you are willfully just forfeiting one of these advantages to get you in, which takes away that high probability scenario. So we're going to go 3 rules. We're going to do 2 charts. Guys, we're going to spend an awful lot of time looking at the market today. And rule number 1 is probably the easiest one to recognize. I'm going to go 2 triggers. Whoops. Only 2 triggers on my 13-2 chart. And I want you to see something. We're going to identify this very simply. Take a picture of that chart. Strong trigger lines are defined when the small triggers accelerate away from the large are angled in the direction of the trend. Here we see 2 examples. These are strong triggers. And this is what we call a weak trigger. So we're going to call this one strong. And for some reason, I have white. There we go. And this is weak. A simple look at the difference between strong and weak triggers. In a downtrend, strong triggers, smalls are going to break away from, accelerate away from the large. The large are wide. They're angled in the direction of the trend. And when I have strong triggers, the odds are favorable for this market to continue down. And you can see that it does. As those small triggers work their way back inside of the large, we call this a weakening of the large triggers. This lets me know that anything can happen in this market. It may go up, it may go down, but as we lose that momentum, we lose the advantage of that odds favorable. We see the same thing over here. Smalls break above, accelerate away from the large. Guys, this is what we call a strong trigger look. It's a very simple look to identify, and what we are going to do is when we have a strong trigger look, we're going to look for rule number 2. We're going to make sure that there's nothing in the way. So if we pop on some indicators, some fibs, some 1-to-1s, some mid-bands, we're going to go through a 2-step process to understand whether or not we can take a trade. And it simply means no termination conditions lets us know that price has not reached an area. I'm going to show you a couple textbook termination conditions. And guys, this is crude oil. This is the whole day. It's been a little slow today. There's a 2-part process for termination conditions. The first one is that price reaches an area. The second is where are the triggers. So we'll start at the top here. Price reaches Fibonacci resistance. When price reaches Fibonacci resistance, absolutely none of my trigger lines break through. This is a textbook termination condition, and because it is, it means that there's no opportunities for long trades, and you can see how the market reverses and pushes down. The areas that we can look at for termination conditions: Fibonacci resistance, Fibonacci support, 1-to-1s. It can be magenta divergence highs or cyan divergence lows. Once again, price reaches the cyan divergence low. Absolutely none of my trigger lines break through. Guys, this is a termination condition telling me that I need to pump the brakes and not look for a short trade. You'll notice that it also corresponds with weak triggers. So rule number 1 gives us the advantage of momentum. We see it very clearly right here. Rule number 2 says that we're not trading into areas likely to hold. You'll notice that I put a circle on this tail. On this 13.2 chart, I put a circle on that small little tail, that wick. On my 5.1, you can see those same tails here. Guys, these tails are potential entries for high probability trend trades. When rules 1 and 2 are met, when the smalls have broken through the area with odds favorable momentum, when the large are up or strong, the smalls are away. If I circle one of these tails, it's going to bring me to a potential entry on my 5.1 chart. And it's really a pretty simple recipe. When I have odds favorable momentum, especially when I'm coming from a termination condition, when the smalls have broken through any areas that may offer us problems and we haven't reached the next, I'm going to look for a pullback to an area of support or resistance inside of favorable large triggers. And guys, rules 1 and 2 are pretty easy to understand. Rule number 1, strong triggers, smalls above the large, smalls below the large, that space created lets me know that the odds are favorable for the market to continue. Rule number 2, no termination conditions. Price reaches an area. If the trigger lines don't break the area, we're not looking for trades in the direction of the trend. It's when both the small and the large break through the area that we consider it broken. But small triggers through an area with odds favorable momentum give us an opportunity to enter a trade. And then when those rules are met on the 13.2, we're going to define our entry on the 5.1. And we're going to go through the whole process on this one. Because rule number 3 says that you are going to use a limit order. You're going to let the market come back to you. And you're going to use that limit order to buy or sell a pullback at an area inside of favorable large triggers. Those areas can be fibs, mid-bands, or 1-to-1s. And once again, guys, I know that I'm going a little quick here through the rules because I want to get us to the live market. If you need a recap on the rules, I want you to go to the live section over here on our YouTube page. And I want you to click on virtually any one of those live videos. Their first 45 minutes are going to be each and every one of these rules and very aggressive, what's the word I'm looking for? Detail. But as we look for the best of the best entry, guys, we're looking for strong triggers on the 5.1. When the rules are met, everything is up. We're going to focus our attention on the 5.1 large triggers. And if they're up and they're strong, we're going to look and see if any of those areas are falling within. Remember, the areas, fibs, mid-bands, or 1-to-1s. All we've done so far is we've decided, yes, the conditions are right to look for an entry. Yes, the 5.1 has strong triggers and areas that are going to fall inside for a potential trade. The rules say we are going to buy a pullback in this uptrend, and that pullback starts with a reversal bar. And a pullback is nothing more than a small retracement in price, a small move down when the overall of the market is moving up. At the time of this reversal bar, you are going to pinpoint the areas where the market is likely to continue. You're going to create what I like to call a window of opportunity. And it's going to extend from your highest point of support to your lowest point of support inside of favorable large triggers. This window of opportunity is the area where the market is likely to continue. But because our broad stroke of a brush lets us know that we have odds favorable momentum, we're going to identify the highest point, right-click on that chart, and we're going to activate a limit order and wait for that market to either come back to us or to just go on without us. One of the most humbling things about being a day trader is realizing that you have zero control over the market. The only thing you can do is trade a methodology that's been proven to win more than it loses to give you a statistical advantage. When this reversal bar prints, your window of opportunity extends from a mid-band down to 1-to-1s. Because of the momentum, we're entering this market at 79.21 at the top of that window. Limit order, we're waiting for it to come back to us. And I'm in a long trade at 79.21. And guys, I will take this long trade 1,000,000 out of 1,000,000 times because I have odds favorable momentum, because I have no termination conditions, and because I waited for the market to retrace to the area inside of favorable large triggers, which means that I have the advantage of an entry where the market is likely to continue. My initial stop will go below that window of opportunity to that area where the market should not go. And guys, 70 to 80% of the time on that high probability trend trade, this is the result. There's a potential, and this has been back tested by me, by John Novak, and probably 1,000 Nexgen traders. This is a trade that typically potentially wins 70 to 80% of the time. Once it begins to move in the direction of your trade, that risk is reduced below the reversal bar. And because I waited for the retracement to the best area, my risk is as small as it can be. But the best part is that my profit potential is grown exponentially by waiting for that pullback. And really, guys, isn't that what we're here to do, is to make money? So rule number 3, waiting for that pullback allows you to reduce your risk and maximize your profit potential. Guys, give me a Y in the room if you're with me so far. I'm going to put this picture up because this is your study picture, especially if you're brand new. And I know that I'm going a little faster than normal, but 90% of you have seen this 1,000 times. And those of you that haven't, if you need clarity, please raise your hand. That's what I'm here for. You guys remember on the 13.2, we went back and we looked at termination conditions, right? Let's take a picture of this one. We could identify through rule number 1, odds favorable momentum. Smalls are above the large are wide, they're angled in the direction of the trend. Everything about this 13.2 says that the odds are favorable for the market to continue up. This is my absolute best of the best look. Rule number 2 says no termination conditions. Again, we're using that most current bar. Price has not reached a Fibonacci area. Therefore, no termination condition is present. So rules 1 and 2 are met on a 13.2. When they are, watch this, we'll just swing this arrow around. We're going to go to that 5-1 chart. We're going to come to our entry chart. And when we get this reversal bar with everything going up, we're going to identify areas of support inside of favorable large triggers. And guys, if you look at this one, from the time of the reversal bar to the time of entry is about 1.5 minutes. Sometimes it's 30 seconds, sometimes it's 3 to 4 minutes. But we've already decided on our large chart that it's time to take a trade. We've identified on our small chart where we need to take that trade. And at this point, guys, we're just going to wait. We're going to wait for either the market to come back, fill our order, and then we step over to management. But all we've done so far is identify that picture perfect entry. That circle on the 13.2 that we did earlier, if it lines up on the 5-1 at an area inside of favorable large triggers, guys, we have a high probability trend trade. Everybody with me on this one? This is what it looks like after the fact. This is how you can study to build that confidence. What do you say we go look at some of our circles? Odds favorable, the smalls have cleared the 1-to-1s. Do you guys see it? Reversal bar. Area of support inside of favorable large triggers, and the market continues up for what appears to be 21 ticks, $210 worth of profit on a rules met high probability trend trade. If we back it up a little bit to our next circle, the area is completely broken. We're at the tail end of momentum. Guys, this is crude oil this morning. I get a pullback to an area of resistance inside of favorable large triggers. And guys, this one finishes the move all the way down to that termination condition. 2 for 2 today. As we back up, we see one more. There's a pullback directly to resistance. This one's in between. We probably would have gotten in at these 1-to-1s. But once again, the momentum from a termination condition creates a pretty easy winner and a great look down. Odds favorable momentum provides us a high probability trend trade. Everything agrees, nothing in the way. Guys, that's your picture perfect. As you grow with the software, you're going to move into what we call a medium probability trade. Guys, this is going to be the majority of your trades. I'm going to come to the glossary of common terms to define it for you. And crude oil is giving us a perfect example right now. A medium probability trade means that most of the indicators line up for a trade. However, a small issue exists. Your ability to read charts is going to help you identify that small issue. The rules that you learn for the high probability will teach you how to recognize it. And when executing medium probability trades, you'll take these trades and manage them assertively. Your ability to read your charts is going to allow you to manage them assertively. And if there's trouble in your way, you may take a portion of the position off at the trouble spot and reduce risk to a 0 loss level. Guys, this is going to be most of your trades. This is a medium probability trade. Can anyone tell me what the one issue is when we're looking at this trade? If we're thinking about the rules for a high probability trade, rule number 1 says we must have odds favorable momentum. Do we have odds favorable momentum on the 13-2, or do we have one of those weaker trigger lines? Exactly, guys. We have a weaker trigger line. The smalls have worked their way inside of the large. The large are still up, but we've lost that odds favorable momentum that we look for a trade. It's anything can happen, absolutely. There are no termination conditions. There's a beautiful area for entry inside of favorable large triggers. So our one issue is that these are weaker, which means that we have to manage assertively. If I enter the market at 79.01, and let's see what John Novak's fill was. 79.04. Little late entry, he said, should have been in at 01. But if I enter at 01, the market goes up 17 ticks, $170 worth of profit. You can take quick profits on a portion, and then when this second lower divergence prints, it gives you an opportunity to manage out for a 0 loss. This trade must be managed assertively. Whoops, I'm not sure what I just did there. I'm going to reload my template real quick. Sorry, guys. And when you manage a trade assertively, you're still looking for quick profits. You're still looking to take a trade where most of your indicators say go. And then you kind of regroup and rethink as it comes through. If you managed out of this trade, your opportunity for re-entry comes. If these small triggers roll, we'll look for a small stab back and look to get to that next area. We'll see what happens with it. Guys, that was a pretty quick rundown on high probability trend trades. What do you say we go to the S&P? And let's do a little bit of study. Let's open up our 13.2 while we wait for that market. Oh, it just opened. I'm going to scroll back and I'm going to look for odds favorable momentum. And guys, it doesn't look like we've had much in the way today. We've had a lot of termination conditions, but so far today, patience has been the key for high probability trend trades. Sometimes you'll get opportunities where price returns to an area on a retracement on a larger chart. This area is likely to stop the market based on this trigger line look. As you grow with the software, there may be an opportunity to look for that continuation down. I think John Novak caught one of those this morning. S&P, strong triggers, no divergence, area for entry inside of favorable large triggers. Notice that that window of opportunity extends from 71.35 right down to 69. It's a pretty good size window. The market continues from the middle or from the bottom of that window, progresses up almost 5 points, retraces a little bit, a break-even stop is safe, and heads up again. We're going to spend the day looking at the live market, guys. We're going to spend the whole day working on those high probability trend trades, identifying them. And we're going to talk about the management of trades as well. And one of the tools that we can use for management on those medium probability trades is a third divergence in the same area. And if we go to the picture, I actually have a picture that I think helps. We had a good lesson on divergence yesterday. First of all, let's define what is divergence. Well, divergence is a loss of momentum in the market. What does that mean? That means that when price pushed down and created this pivot, and a pivot means that the market went down and then up, or it went up and then down, it means that there was a loss of momentum. If the yellow arrow represents price, the red arrow represents momentum. Momentum didn't follow. Because it didn't follow, your software recognizes this through using MACD-BBs in the background, and it gives you a negative number and a cyan divergence line from a low. When this happens 3 times in the same price range, smaller chart, small triggers on the wrong side, lower divergences, all become management opportunities. Because what happens is you go from, whoops, I wasn't on this page, was I? You go from odds favorable, strong triggers. When those 3 divergences, those 3 losses of momentum happen, look at how we now have anything can happen triggers. And a very key concept is if you get a third divergence higher than the second from a low or lower than the second from a high, very powerful head and shoulders may reverse the market. So we can utilize these patterns to help us identify change on a larger chart sooner on a slower chart. Rules 1, 2, and 3 are all outlined for you right here in the educational tutorial section. Putting them all together as the high probability trend trade is great, guys. And all we've done right now is we've focused on the best of the best entries. There's a section dedicated to trade entry technique, helping you identify management. And then the reminder right here. For your first 30 days, guys, focus on these high probability trades. Focus on having every advantage in place because it's going to teach you to read your charts. And when you read your charts, it's going to give you the opportunity to identify areas where the market is likely to continue even after the conditions of a high probability trend trade have no longer been met. Here we see one of those second lower divergences. You notice that the small triggers have moved to the other side of the large. Our trend has changed. No more long trades. Our small chart has given us an indication that things may be changing. Our large chart changes slower. You notice that the large triggers are still up, the small triggers are down. 39.69, this Fibonacci area is still a termination condition to the downside. All of my triggers are above. My large are above, my small are above. Because my large are up and my small are down, I don't have odds favorable momentum. I can't take a long trade because rule number 1 isn't met. I can't take a short trade because rule number 1 isn't met. 90% of what we do is reading our indicators, waiting for the market to provide us an advantage. There's a wonderful pattern happening here. When the market creates a pivot from beyond key areas, not quite to the next key areas, this midband tends to be the first target and creates a pretty substantial bounce. Identifying that along with your divergences gives you an opportunity to manage out, to be patient, let these areas hold if they're going to hold. Those small triggers come up, and now we can begin looking for a continuation of that initial. Notice the second higher divergence. Notice trigger lines. Everything is above 79.50, but I don't have odds favorable momentum. As you grow with the software, so will your plan. Let's see what the market does right in this area. All of my trigger lines are above it. It's an area likely to stop the market. My small triggers are up. My large triggers are up. I don't have odds favorable momentum, right? Smalls are on the wrong side of the large. No long trades to be had, but this box is at a very key area. This is an area that either needs to break to the downside, or if it continues up from this spot, the odds are favorable that we may be trying to get up to 76.75 first, 85.31 second. Just using chart reading to create expectations, allowing our rules to keep us from looking for trades where there's no momentum present, and being able to identify through Fibonacci key areas that need to break in order to go one direction and key areas that need to break in order to go the other. Guys, we are in an absolute holding pattern on the S&P. I haven't shown this picture in a while. I'm going to show it today. At these key Fibonacci areas, guys, we're going to let these guys take over. This shark is my visual representation of deep pocket investors, institutional traders, the guys that move the market, the guys that create tops, the guys that create bottoms. These are the people that are going to decide whether or not this area breaks. We're going to let the sharks fight it out. We're going to let those deep pockets battle at key Fibonacci areas, and believe me, they see them just as clearly as you do. We're going to be the remoras, guys. Our high probability trend trade allows us to let someone else create the top, allows us to let someone else create the momentum. We don't have to be first. We just have to put ourselves in a position where we have a statistical advantage. Pivot from beyond the area, mid-band's the first. You can see the fight at the fibs. Can we identify through trigger lines who's winning the fight, at least initially? I've got smalls below the large. The large are wide, they're angled in the direction of the trend. But guys, I've still got these key areas that I need to get through. I still have this potential pivot stop out that I need to get through, but we're definitely leaning to the downside. Rules not met just yet, not for a high probability trend trade. Not to the short side. Let's talk about this trigger look. Large triggers remain above the areas. Small triggers have broken through with odds favorable momentum. This is what we call a 50-50 trade. These are areas that have the potential to break based on momentum, but I have 1, 2, 3 areas that haven't yet broken. If I'm looking for a trade on a 50-50 scenario, I don't want to see a loss of momentum on my 5-1. I don't want to see trigger lines split, a big division between the two. So we're just in that holding pattern again as they fight. What are they doing right now? The buyers pushed up. Let's look at a big look. We're going to recap real quick because I think the sooner you respect that you don't control the market, the easier it becomes for you to be patient to wait for that best of the best. The sellers absolutely crushed it today, all the way down to 39.62, right where the buyers had them lose momentum. We know that because divergence prints. A handful of buyers push as hard as they can, and they're able to get up to 76.25. The sellers are here, the buyers fight back. The sellers aren't ready to give it up yet, guys, so they push one of those 50-50 trades, and they push as hard as they can. But the trigger lines don't follow. A second loss of momentum, and the buyers push, and the sellers are ready for them. A loss of momentum for the buyers. And now they've pushed again, right to that key divergence low. This is a textbook termination condition. And when we left, the buyers were mounting their fight back. Let's see who's winning. Guys, they are absolutely stuck like Chuck right in between these key areas. What do you say we sit on our hands for a moment? We'll wait for one of these sides to win. One of them are going to decide who's going to win. And when they do, we'll look for odds favorable momentum. We'll wait for no termination conditions. And we'll put ourselves in a position to look for an entry for a high probability trend trade. Chart reading also helps us. We can use a higher time frame. Let me see where my 21-3 chart is. If I go to an even higher time frame, my 21-3 is showing me a bias to the upside. Now my 13-2 is beginning to show me that same bias from a pivot stop out. My triggers are rolling. It's still too soon. We've got to break either this pivot stop out or this pivot stop out. These are the key areas to watch to look and determine who's going to win this fight. Does that make sense, guys? It looked like the sellers were going to take it, didn't it? Rule number 2 said don't try that short trade. It's not going to work. Now we're in the same position here. Everything's leaning the same way, but I don't have any trigger lines through this key magenta line. Let's see if we can get them up and through. Let's see if somebody can take a win. Right now, the buyers are doing what they do, aren't they? The smalls have broken through, the large are up, they're wide. Here's a reversal bar, and can't I identify an area of support right there inside of favorable large triggers? This is what we call a pre-trade picture. Guys, I'm not telling you to take a picture or to take a trade, but what I am telling you is that when I look at my rules, whoops, sorry. Just wanted to take that picture and put it on the chart. Is the market coming from a good bottom? Guys, there's a termination condition creates a full reversal. Do I have odds favorable momentum? Absolutely. No termination conditions? I'm 50-50 on this divergence high, which means that if divergence is true over here, I'm going to cancel that order. And I do have areas inside of favorable large triggers. Divergence is printed. I'm going to close out. It never got back to my areas anyway, but guys, this is it live in the moment. Look how it tries to pull back to close that gap to the large triggers. Rule number 3 in effect. And now we're on that same thing again. I'm going to go through and look at some of the pictures that you guys have posted today. A lot of Friday fighting going on. Ron C., let's see what you did. Good morning, Ron. Always nice to see you. Ron takes a little different approach. One of the great things about Nexgen software is that it's just like anything else. You're going to use it the best way that it suits you. When you learn to read your indicators, when you learn to recognize advantages on charts, you're going to find a plan that works for you. The key is consistency, testing it, making sure that it is the right look for you. Ron's got one that says, when I clear key areas, I'm going to get in, I'm going to take money at the next key area. Get in, get out, make your money. I love it, Ron. Consistency for days. Gary, let's see how you're doing. Anything can happen triggers. He puts that on there. There's no termination conditions. He gets a pullback, and you didn't take it because of the white bar heading into the trade signal. I can hear Ron. I can hear John talking about this one. Same trade. Gary, are you with me, or is there a trade setting up? I want to show you something. This is a pretty cool lesson. If you guys spend time in the trader's room at all, you've seen a guy named MB. He's been with us for an awful long time, does a lot of market flow. Gary, when you get a white bar heading into your entry spot, Remember, this white bar can give you that market flow signal, but I want you to check this out. I love this one. When the white bar headed in is attached, whoops. Well, I'm not sure what I just did there. Is attached to the small triggers. And Gary, it is right here. Guys, this is a good one for those of you that are beginning to grow with market flow. It's a very positive thing. So if you're watching your market flow chart, Gary, or anyone else that's using market flow, when you get a white bar headed into your best of the best area and it's attached, meaning inside of those favorable large triggers, those small triggers going up, this is a pretty good indication that you're going to get that signal. If it's not attached, if it's on the wrong side, it creates a different scenario. So on this one coming back in, that white bar was a pretty good advantage. This is a lesson that I learned a while ago and I forget it about every 3 months. And this one is compliments of MB. I like to give credit where credit is due. One of the great things too is everybody uses the software different, and when we see things we share it as users, as clients, as educators. Hey, here's a pattern that I noticed. But the white bar attached as you go into that best of the best area gives you at least an opportunity. Here we go. And if John Novak's listening, he probably has the original picture from a couple years ago. And remember, by attached, it means that it's literally inside of those small triggers that are strong and up. You're more likely to get that market flow signal. So Gary, I think it's great analysis. I think you read it wonderful. And there's a great lesson on that market flow bar coming in. Let me see where we're at. Grab some. Next picture. Alex G. Same trade, I'm guessing? Absolutely. Anything can happen. It's weakening. Great recognition. You wait for the market flow signal. You make $100, you know that it's medium probability, therefore you manage it assertively. Because you manage it assertively, you're able to get $100 and a break even. Alex, absolutely perfect execution. Nice job. Gene, you said this was your first trade. You got in very late as the charts opened. Second trade managed out of both contracts, 10 and 11. Got you. So let's see where you got in. Your timestamp's a little off. If you sync your clock, it'll fix your timestamps. It's hard to tell where you got in. I see which bar you got in on. And it looks like you were able to make money on the first one, Gene. And then as you come down here, you said that you managed out. So the one thing that I recognize here is you're directly into a termination condition, right? So if you're going short directly into a termination condition. You made 110 on the first, 110 on the short trade. Nice. Still trading into a termination condition after a good bottom. Just like to recognize it, but if you're making money, good job. Let's keep making money. And then that first one was weak triggers. So if you got in, it gave you an opportunity to manage out. Both longs? So you went long at 80 at termination. Okay, I'm sorry, it's a little hard to read the way it's over. So you went long at 80 at an area of support with all the triggers above it, with the large triggers more than a full bar away, looking for an opportunity to make money up. Gene, I love that. I apologize for my inability to read your chart so well. I love the first one. Great shot, good management. Second one is a long, I was thinking that was your stop out from here. And then you make money twice going up because this is an area likely to hold. Right on. Good job, Gene. Guys, sometimes I'll misread your charts. Gene, there is a thing where you can sync your clock. No worries. Let me see. I don't know if I'll have it in my history. If you go through, and I think John was saying, if you sync your clock on Windows, it cleans up the entry and exit stamps going kind of wonky. He'll correct me if I'm wrong. Just for you, it probably makes it easier to read. See what we have here. Trend trade, strong triggers. Took the pivot stop out. I'm going to use this one for a lesson, guys. You had it synced with the class? Remember how we said 90% of what we do is going to be chart reading, right? I want to talk about 5-1 divergence expectations for a second. John and I were actually talking about this one earlier this morning as well. When everything says up, when my rules are met, when I have strong triggers, when there's nothing in the way, when it's time to look for a trade, sometimes you get a divergence on your 5-1 and you'll notice that there just wasn't an entry here, right? We didn't quite make it. Well, a second divergence prints. All of the trigger lines are strong. Everything says up, smalls are outside. We're going to talk about expectations. Very often when we get this pivot stop out look, as we come back into an entry, the market more often than not takes out the previous pivot. This is a pattern recognition. And look at that entry. That's a picture perfect entry right at the pivot stop out. So a pivot stop out above the long typically results in a pivot stop out entry. And the other side of that is a pivot stop out below a short, typically results in pivot stop out entry when 13-2 rules are true. Guys, this is an awesome entry trick, things to look for, a little pattern recognition, because what this does for you, I'm going to give you guys this one in the classroom. What this does for you as a user is it gives you a little bit of patience. It gives you that little bit of expectation, and you'll notice that it comes right back to these one-to-ones that printed just a little bit below the large triggers, but everything still says this market's going up with strength. Guys, this is a wonderful chart reading tool. And look at the execution, virtually zero risk. And there's that first trouble spot. Nice trade, John Novak. What a beautiful entry. Yuri, guys, there is news in 1 minute. Please be careful. Yuri knows the lesson. There's that pivot stop out. Off it goes. Yuri, exact same trade. Absolutely beautiful. Edwin D, rough start. Ed, I'm going to call you out real quick. You ready? I have seen 0 of 3 charts. Are you following rules? Let me hold you accountable. I'm a big, mean guy. If I'm holding you accountable, it might help a little bit. Guys, here's that S&P as we go into news. You'll notice that they push directly to that key Fibonacci area. 3 divergences in the same location. And off we go to the races. While these guys do their thing, I'm going to take a few minutes. I'm going to go refill my water. And guys, I'll be back in just a second. Whoops. There's my break picture. Stole that one from my brother. If you take a trade, post your trade. If you don't take a trade, post a picture of what you're looking at, why you didn't. Why? There we go. I'll be back in a few minutes, and we'll get right back on it, guys. Let me take a quick picture of this. We're going to talk about this pattern as well, even during news. We'll hit that when I come back. Back in just a second, guys. I don't know. Going live. All right, guys, we are back. Let's hit into that second hour. As you noticed, news moved that market, didn't it? What's pretty amazing is that even when news is moving the market, even when the market is acting a little radically, going quickly, going sideways, you're going to find that even though they may be a little too far, Diamond Dave, good morning. Nice to see you. I'm on 7 for class. Just keeping it familiar on 7 for class. My personal trading, I am on 8, though. But these are NinjaTrader 7s, you bet. Guys, this is pretty amazing. When you look at what happens even during a news release, we almost made it to Fibonacci resistance here, came very close. Market pulls all the way back to a mid-band, and there is a key concept. When price snaps back away from these large triggers, accelerates away and hits one of these key Fibonacci areas, I want you to notice the distance back to the large triggers. If this distance back to the large triggers is greater than the length of a reversal bar, this is 100% termination condition. This is a mid-band that's likely to stop the market. And this is something that you're going to see over and over each and every day. Price is going to pull back, and it did it one more time for us. Price pulls all the way back, reaches that mid-band, and you'll notice once again that there's a full bar's distance back to those large triggers. Another indication that we're not looking for short trades yet. The background is red, the larger down, the smaller down, but this snapback, it acts as a vacuum. It's a pretty cool concept. I've got a wonderful picture of it. Call it the gap theory. If price pulls away from the synthetic triggers too fast and far into a Fibonacci area, whether it's a mid-band, a fib, 1-to-1s, then it will snap back to the triggers. It's exactly like a slingshot. We see it twice right here, and this is a phenomenon that's actually so common. We identified it a couple times yesterday as well. Price reaches this key area, large triggers refuse to follow, price snaps back. We saw it going the other way. So this is a pattern that I love to recognize. This is a great opportunity for you to avoid getting caught in that vacuum when the price is likely to snap back. And now you can see that we've put a double top in. We have two divergences right at a key Fibonacci area. I can't go short into support with everything above it, but I certainly don't want to go long into this area, not until this area breaks. We've already had two indications, and you'll notice that my large triggers are flat. They're kind of lifeless. The large are down, but the small are on the wrong side. There's some indecision with trigger lines over here. We're in a hurry up and wait pattern. That news shook it up, and now we're taking just a few minutes to wait and see what's going to happen. We've got a picture here. Price pulls all the way back to 1-to-1s to a mid-band. Large triggers refuse to follow. John Novak taking advantage of that, getting in at this area likely to stop the market. Nope, that's an exit. He went short after the termination condition. Sorry, John. Takes quick profits, gets out break even, does it twice. Takes the short, good looking short from a termination condition, takes quick profits, doesn't lose money. And now we're just waiting for it to shake out a little bit. Michael, good morning. Nice to see you. Let's see what you did today. Oh, let's blow this up a little bit. All right, Michael, you did have odds favorable momentum, absolutely. You had no termination conditions, but you identified it as a 50-50, meaning that the small triggers are through, the large triggers are not. No divergence on a pullback. Notice that you have a pretty wide window of opportunity here. Entries just a little bit above, and then you get stopped out at that lowest fib. And Michael, this is a great example. Had you entered, you could have moved your stop below the reversal bar on that 50-50, managed out, taken a little smaller loss. And then this one, if you're going to let it retrace all the way back without that divergence, you really have to put that stop where the market shouldn't go, which means that with this many areas, it really creates a high risk scenario on a 50-50 trade. Does that make sense? There's a point on a 50-50. I like a small window of opportunity because the reality is, especially not coming from a good bottom, is these have potential, but they're not guaranteed to break. I'm not willing to put 5 or 6 points of risk on a maybe trade, not even a maybe trade, on a medium probability trade. On a high probability trade, I'll take that large window of opportunity. On a 50-50 trade, I like things to be tight and concise. That's a pretty good example. 50-50 trade, coming from a strong bottom is always a plus. On your trade, we're coming not from a good bottom. You were late on a lot of trades yesterday? All right. That happens sometimes. Are you using a market flow chart? Or are you strictly on the 2? One of the things I like to do, Michael, if I've got a 50-50 and I've got a wide window of opportunity, I might wait for a market flow signal. I'm not sure what market flow said in that scenario. Guys, here we go. Different monitor. Okay. I do that too. You know that if your monitors are linked, you can capture. And I can literally capture both of my monitors coming through. I just have to click and drag all the way across. Gives you an opportunity to get that market flow if it's over here. It took me about a year to learn that. Alex, let's see what you're doing. Alex, you say you have a 50-50. You're coming from a good bottom. You've got an area for entry. Just didn't work, Alex. It's a 50-50. It's a medium probability trade. It's a good looking trade. Strong triggers. Larger up, smaller up, tiny window of opportunity. Good stop placement. Congratulations, Alex. You just had a little cost of doing business here. That's it. That's all it is. Sometimes it's nice to hear that you did everything right. It's just one of those ones that didn't work. And then this is the S&P. Market comes back when the 5-1 triggers roll up above the 13.2. Usually the trend resumes up. So let's look at that on the whole chart here. Support's definitely likely to hold, small above the large. There's that pullback when everything starts and that trend does in fact continue up. Alex, I agree with you. It is important to hear that. And then there's that whole look. Large below those 13 large triggers, not the best look. If you just let things roll and swap position, you get the exact same entry without all the headache. For those of you that haven't been with us for a while, your synthetic triggers on your 5-1 are now your 13.2 large triggers. And I'm telling you, this is probably some of the best stuff I've seen in a long time. Absolutely love it. It gives such a great opportunity, great recognition. Visually, it's easy. And as you begin to study, it helps a lot. Now we're into resistance, divergence high. All of my trigger lines remain below this area of resistance, guys. We know this to be a pivot stop out, correct? Or the potential as it's going. No more long trades into this area. This is a very key area. This is an area that we're going to want to let break. Notice that none of your triggers on the 5-1 have broken through the area either. Your small triggers have come back to the other side. Z, I do every day. When we talk about the 21-3, and let's go through that because I think this is great. I teach on a 13-2. I do. Thank you, John. No we in trading, but I do. I said I do, didn't I? For the sake of Class Z, we do a 13-2 and a 5-1. It creates an awful lot of opportunities. The 13-2 acts as a broad stroke of a brush. The 5-1 gives you an opportunity to refine it. If I pull up my 21 chart, the 21 chart begins to act as my broad stroke of a brush. I'll just put it over here over the 5-1 for a second. So it's very similar. My 21 chart has weak triggers directly into a key area. The fib is just above it. So I go to my 13-2 chart. It's almost like this is a medium probability scenario, and then my 13-2 is a low probability scenario. It's that same starting large, working down. And there's a great picture. This is a 21-3. Does kind of everything the same way a 13-2 does. So it can give you a general consensus, maybe even a tiebreaker if you're looking for a 50-50. John's got his reggae music working, I bet. Let's see if I'm right. So Z, does that make sense? If your 21-3 is cranking to the upside, odds favorable, absolutely nothing in the way, it might help you make a good decision on a 50-50 trade that's happening on your 13-2. If your 21-3 is at a termination condition, it helps you make a good decision on whether or not you want to try to take a chance on something. So it's just chart reading over and over. Looking at the largest chart, seeing the information that it's giving you. Whoops, thought I closed that one. So for example, crude oil is struggling a little bit. So let's see what our highest time frame says. If I look at the 21-3, I have large triggers above, I have small triggers below, a couple divergences, divergence from support. I'm really not getting any clear help from a 21-3, which just reminds me I should probably make sure things are perfect on my 13-2, and then likewise on my 5-1 if I'm looking for opportunities, if you're looking for opportunities. Does that help, Z? And the cool thing is if you wanted to, you could go to a 34.5, you could go to a 54. Some people want to hold longer. Some people want larger moves. They're okay with larger stops. I could come in on this crude oil contract and build a 34.5. And let's see what the 34.5 says. And guys, this is one of those things I don't even have. There we go. If your 13-2 is a broad stroke of a brush, your 21-3 is power spraying the side of a barn, and your 34.5 is spilling paint on a football field. What happens overall is going to take a long time. What happens on the 21 is refined on the 13-2. What happens on the 34 is refined on the 21. So any time frame, really, any market, the patterns remain the same. The patterns are the patterns always. And once you begin to recognize the patterns, That's a 34.5. So on a 34.5, what I can recognize is an extremely key area of support that continues to hold. The next area continues to hold, and now the next area continues to hold. If I get up above this 79 area, 79.55 becomes a very realistic expectation. And now just wait for all of my charts to agree. Good morning, Karis. Nice to see you. But what are we witnessing right now? Remember, we saw this earlier and we talked about it. Let's take a picture. I love reminding myself that I'm not in control. Sellers crushed it. Absolutely, Z. Let me give you the picture. Gonna keep it simple. Whoops, that's not the picture. There you go. I'll put it in the room so you can steal it. 13.2, rules 1 and 2 get met. We establish momentum. We establish that there's nothing in the way. And then we'll refine that on the 5.1. And then as you grow, you might look for bigger moves. Hey, Jim K, thanks for being here this week. Kara said, same chop. Guys, look at this. The sellers crush it all the way down to a key area that we knew about before 4 a.m. The buyers push all the way up and can't make it back to that fib, right? They tried, couldn't do it. Sellers fought back. The buyers stop them right at key Fibonacci support. Buyers push again, can't seem to make it. Sellers trying. Buyers give it another good, and exactly what John says. Just because they don't make it doesn't mean that they're going to stop trying. These guys have key areas where they're going to unload. And remember, let them fight it out. One of them's going to win. And when they do, we're going to be there to take advantage of it on a rules met trade. Of course there is, Karis. Watch this. Let's see if that's set up. Let me do this. So let's say, Karis, hypothetically, you're looking for a short. And I'm not saying that this is a rules-based trade, but it's going to lend itself. You get your reversal bar right. And watch this. I can just bar by bar. Where's my entry? You can pick your entry. And this is a little painstaking, but it gives you full control over each bar's movement to go through and make decisions and think pragmatically and take notes. So let's say that you entered right there at the bottom of the large triggers. You know where your entry is. You know where your stop is, right? So what's next? Sorry, I'm kind of spread out here. There's my next bar. You can say, uh-oh, now I have divergence. What's my management plan need to be? What happens after? What do I notice after this? Is there an opportunity for a second entry on a pullback? So you can literally bar by bar. I love doing this, and this is a great way to learn your entries as well. Going in and having the ability to move that market. Market replay is amazing. You can go through, you can do it normal time, you can do it 500 times to get to the next couple hours. But if you really want to study, you need to back test hundreds of trades. Well, I hope you have free time. Can you look at a trade? Let's see if I can find an example, see if I can help you. I've done this before too. Just pull up your trade and study it and say, well, what happened? I enter the trade, and you can still see all your bar by bars, and you can say, with everything in my way, with nothing going on, I know that there's going to be wicks on the 5-1. I need to make sure that I'm above reversal bar markers. I need to make sure that I'm above areas likely to hold if my rules are met. Like to set entries and run ATM rules over past action. Karis, have I ever mentioned to you that I was an English Lit major? Reach out to John. Everything that you're asking, I guarantee he's done in some form or fashion. Definitely not. You know, my first day of class at University of Houston, if you're a liberal arts major, you have to take this class. And the professor writes, "Would you like fries with that?" on the board. He goes, "Get used to this phrase, guys. A lot of you are going to be saying it." Which is a little discerning if you're a 19-year-old freshman, but I was a 30-year-old junior, so it worked out. Ninja Trader version, it's not great. And I'm not sure, to be honest with you. Ask John. And Karis, do you ever go over to the traders section on Discord? You know we have a whole nother room in the, where'd it go? Trader chat. You can come in here, post that exact same question. I mean, this is a meeting of the minds over here, isn't it? And guys, for those of you that are in here and haven't gone over there, go take a look. It's pretty amazing. You can see what other people are doing with the software. You can see what people with a decade, with 15 years, with 17 years, what these guys see, what they're trading. Some of the looks are different. This gentleman's been with Nexgen for, I think, 17 years. Started in the beginning. You're going to see some amazing strategies. You're going to see some amazing trading coming out of these guys. But remember that they've been doing this a long time. What do we see now, guys? Here's one of those pivot stop outs. Small triggers are through, large triggers are not. We know it to be a 50-50. My large triggers are split, which means that my window of opportunity is 12 ticks wide, $120 wide. Have to make decisions on a range-bound market on what you're comfortable with that. Smalls above the large, larger wide, angled in the direction of the trend. Looks like with no divergence, it pulled right back to support inside of favorable large triggers. There's your first divergence on a 50-50, giving you an opportunity to determine whether or not you want to manage out, or if you believe in the power enough to keep your stop in place and look for that next key Fibonacci area. Awesome. Don't forget to swing by and say hello every now and then. I like it. One of my favorite things about the community here, guys, is everybody sees things differently, everybody reads things differently, but ultimately we're all looking at the same thing. We're looking at fibs and trigger lines. We're looking at areas that have the potential to hold, areas that have the potential to break. Guys, now we have strong trigger lines. I have zero termination conditions. And if I get one of those pivot stop outs here, and I may not, remember we talked about the expectations that if divergence prints here, it may take out that previous pivot. Of course, it doesn't look like it's going to. John, thanks for answering that one. Yuri, let's see what you're doing, my friend. That same one we talked about, you wait for market flow confirmation. Quick money at the target. Nice trade, Yuri. The advantage of momentum. The advantage of a small window of opportunity, no divergence coming in, and even your 8 range confirms a little bit there. I like it. New users. I have 47 people in this room, and I know that some of you are on demo. Take a second, type in the room. Let me know, how are you feeling? How do you feel about the concept of odds, favorable momentum? How do you feel about the concept of termination conditions? Could I provide any clarity? And Karis, that's a good one. When the small trigger lines remain outside of the large on your 5-1, odds favorable momentum, that market's likely to continue in the direction when it's supported by the 13.2 as it is here. And then we reach that key area, and there we go. Guys, the buyers won, didn't they? Right up to the next key area. The sellers got what they wanted, or the buyers got what they wanted, and the sellers took over all the way down. And the buyers said, haha, we've already identified this as our area. And push and fight and push and fight. Everything rolls and right up to the next key area. Take the money if no triggers are breaking the fibs. Amen. That's a good one. So now as we pull into these one-to-ones, I had someone tell me once that the one-to-ones love to collect overrun. So when you find yourself trading directly into one-to-ones, if your trigger lines are weakening, none of your triggers are broken through, guys. That's a key point. Absolutely, Z. So first tip, let the 13.2 lead the way. Just like we talked about that picture that I posted. Let the 13.2 let you know whether or not it's okay to take a trade. Come to the tutorial section and let me know where you're at with this. I think that the best place to start is at the beginning. So right here on the tutorial section, have you watched the introduction? Because this is going to describe what you're looking at. This is going to give you awesome. So after that one, there's a couple great videos coming through talking about what you're looking at. And then what we focus on for the first hour here, Z, is the high probability trend trade. That's where I'm at. All three rules are clearly defined, reminding you what to focus on. And then, to be honest with you, Z, a lot of it's just repetition, getting in, taking a lot of pictures, participating in class. And then from the main Discord page, there's a whole self-training. And this talks about limit orders. That's the most recent one. I like that that was put on there. But if I go to the top, there's a 100%, let me give you a path, let me simplify. John Novak's done an amazing job of putting this together. There's a user guide section that takes you to the tutorial section. There's the key concepts, high probability patterns with links to get you to each and everything. And this is a perfect timing, Z, as we come into the weekend for you to go through. Here's your trading rules where you can actually go through, starting with that high probability trend trade. There's a great video put in for you right there talking about 50-50 trades. There's a section dedicated to being able to read your indicators, a lot of the patterns, and it's a lot to take in on the first day. But if you kind of slow roll, start at the beginning, don't put the pressure on yourself to know everything in the first couple days. Z, what we do, especially on demos, is right now you're getting a feel for how we teach. You're getting a feel to recognize the potential, and the potential is absolutely overwhelming, I think. I love what can be accomplished. What you're going to begin to realize is you're going to realize that these key Fibonacci areas have the potential to stop the market dead in its tracks. So you get the advantages of understanding where highs may be, where lows may be, and then my job is I'm going to come in and I'm going to teach you how to read these momentum indicators to help you capitalize on the advantages that the software provides through taking a very time-tested set of rules and simplifying in the beginning. So that was a lot of talking for keeping it simple, right? Go through Discord this weekend. Start basic. And the great thing is, Z, is you can come to class Monday morning and hit me with every question that you have. Write them down. Take pictures of them. Learn to use that TechSmith capture software, because you can literally take a picture of everything that you see as you watch the live markets, as you go through market replay. And I love it when people do this. I can take that picture and I can do, is this a term? Termination condition, and draw an arrow. Is this strong triggers? What's that negative number mean? Most people don't realize this because they come into class thinking, well, I don't want to take up class time. Be selfish with class time. It belongs to you. This is your class. This isn't a lecture. It's very much a discussion. But if you come to me with pictures like this each and every day, I can guarantee, well, not guarantee because everybody's different, but I can tell you that the odds are in your favor greatly, that you're going to get exactly where you want to be. You're going to learn to read your charts. You're going to learn to trust a methodology, and you're going to find yourself in a position of being successful. So use the heck out of me, Z. And if you ever have questions outside of classroom time, if I'm in front of my computer, I will respond. And this goes for everybody. Feel free to reach out via email, ask a question if you need a little clarity. I check my computer a couple times during the weekend, but usually I'm out walking around in the woods with my wife. So good stuff. Great first hour and a half, guys. Let's talk about entries. Let's talk about high probability trend trades. Developing a plan. I've created a checklist, and I do this for my own brain. It keeps me accountable. It helps me understand my rules. I like to write these rules or post this on every trade that I take to make sure that I'm staying focused on this high probability trend trade. I'm going to give you guys a copy of it. I'm going to put it right in the room right now. You'll be able to download it. And then once you download it, it is yours forever. I encourage people, print it out every time you take a trade. I'm trying to figure out where it went. Every time you take a trade, make sure that it meets the criteria of the checklist. And I've actually created two. I've created one that's just the wording. And then I've got this one. This is the one that I posted in the room. Not only does it have the wording, the rules on it, but it gives you a visual straight from the manual, what those words should mean to you, what it looks like when we have termination conditions, what it looks like when you're taking the best of the best entry. You can print this out, put it on your desktop, whatever you need to do, but that's a great way to get comfortable with what we teach. That first trade, that high probability trend trade that typically wins 70 to 80% of the time. And we focus on entries. I'm going to let the market work through its termination conditions, but we're going to focus on entries initially, guys, and you're going to write a plan that supports your focus. And use the phrase, my trade is, this is your trade. This is 100% you. Trading is an individual sport. It is not at all a team effort. My trade is the high probability trend trade, and in order to enter this trade, I must have the conditions of the checklist met. I've put a copy of the checklist directly into my plan, and I know that this is what has to happen for me to get into a trade. Pretty simple. 3 rules, 2 charts. And then I'm going to take some pictures just like we have today of my absolute perfect entry, and I'm going to put them in my plan so I can go back and make sure that I'm looking at the best of the best every time. And then as I move from those high probability to medium probability, I may need to add some conditions into my plan. Well, if there's divergence on a 50-50 trade, then I need to make sure that these conditions are met. So it's 100% met or 100% entries. That's the first bite of the elephant that you're eating. And then after you work on your entries, it's time to develop a management plan. So Z, for example, as you're brand new, as you're coming in, you're going to understand entries within 3 to 4 days. There's no doubt in my mind. I watch people do it every week. And management becomes the second half of what we're doing. I've included in this example plan a very easy, mechanical, methodical approach to managing those great entries. Let me find, I'm going to put this plan in the room for you as well. There it is. I'll put that in there. And it kind of revolves around trading 2 contracts. Clearly define it. I'll trade 2 contracts. My initial stop will be 12 ticks. It'll be adjusted above or below the window of opportunity. Go through, take a look at this example plan, focus on your entries, guys, and then we're going to grow from that. Right now, we have a termination condition that pushed us all the way back to a key Fibonacci area. Does everyone see it again? The large triggers absolutely refuse to follow, which lets me know that price is likely to snap back and close the gap to those large triggers, which means that this short is probably ill-fated. My large triggers are up, my small triggers are down, everything is above support. I can't go short just yet, even though we had a good top, and I'm not looking for long trades directly into an area likely to hold. So then John goes to the 21, and I love that he did this. All the trigger lines are above resistance. The market is likely to continue up on a very, very broad stroke. On a 13.2, support is likely to hold on a very, very broad stroke, just solidifying the idea that there should be no short trades here, but it's probably too soon for a long trade. Does that make sense, guys? All we're doing is reading charts. Waiting for the advantages. On our 21.3, all of our trigger lines have exceeded the area, but we have those anything can happen triggers. I've coupled this loss of momentum with a divergence on the 13.2. I have 2 divergences on my 5.1. I have small triggers inside of the large. Can we identify this as giving away the advantage of momentum? Taking that high probability scenario out of the equation. So then if we do it again and we look at that 21.3, what does it tell us? It tells us odds favorable to the upside, doesn't it? Which means that we just have to let things sort out. If the market's really going to continue up to the next key area, things are going to roll. We're going to get an opportunity to go the right direction, making sure that we're not fighting the trend or momentum or any of those areas likely to stop the market. So if you're a rules-based trader, high probability trend trade, you're in a holding pattern on crude oil. If you're a rules-based trader, high probability trend trade, you're in a holding pattern on the S&P. Sometimes the markets like to remind us that 90% of what we do is just reading charts. 90% is going to be waiting for those clear advantages. Some of the most expensive words in day trading: I think, I hope, it might, it may, I want. If you change that verbiage to indicators say, and you keep your entry conditions, rules met, rules not met. And don't say that you suck. You don't suck, you're just not putting your attention in the right spot. Guys, you're going to learn to read your indicators, and you're going to learn to read them very well, and you're going to become very good at it. The second half of being a day trader is learning to control yourself, to be willing to be patient. And I know wait is a 4-letter word, right? So stop looking at everything. Start on your 13.2. Based on everything that we've said today, guys, what direction is that market going to go? Without question, without hesitation, without any doubt in our minds, which direction is that market going to go? My large triggers are up and my small triggers are below them and down. No idea. Ron, it's the best answer ever. Guys, I don't have a clue, based on this look right here, which way the market's going to go. Has anyone ever tried to only keep their 13.2 up and wait for the rules to be met on the chart? I've done it. You know what happened? I won a lot more than I lost because I stopped letting the 5-1 trick me into breaking my rules. There's some voodoo that goes on when you watch the things that don't matter. But if you start off initially, my trigger lines say that I can't trade, period. Do that for 30 days. You're going to learn to read your trigger lines. And then that's going to turn into, my trigger lines say that I don't have a clear advantage. Support below me held, resistance above me held. So now not only have I identified that I don't have the advantage of momentum, but I've also identified key areas that I need to see break before I start looking for a trade. So until this market breaks above Fibonacci, likely to stop it, or until this market breaks below support, likely to stop it, guys, I'm going to go make a sandwich. John's listening to music, waiting for it to be easy. I'm going to throw paper airplanes at my wife across the room. I'm going to do something other than convince myself that I should be trading when I don't have an advantage. Give me a Y in the room if you're with me on that, guys. The 13.2 leads the way, and if the 13.2 says you have a snowball's chance, then it's time to just sit on your hands. So that's what we're seeing on the S&P. What's crude oil doing? Can we see it again? Large triggers suggest up, small or below the large. I don't have momentum. Absolutely, Diamond David. I will be here every day. Slap fight. It's good to see you in here again. Support is likely to hold, isn't it? All my triggers are above, but I don't have momentum. So guys, let's play if then. If this market's going to continue up, if this support's going to hold and they want to get to 79.83, what do you need to see to take that trade? And I'm giving us room to the upper one here because I'm going to draw. Let's just chart read. I've identified my trouble spot. 79.63 needs to break, right? What does that mean? That means I need to get those small triggers on the correct side of the large. If this happens, I'll look for an opportunity to the upside. If the sellers decide that 79.63 is their line in the sand and the market pushes down, then I need to get below this area with odds favorable momentum. If then. And look at that key area. So far, The sharks are telling the remoras, just keep swimming. Don't jump in. We're going to fight it out right at these key areas. I've got 3 divergences in the same location on my 5-1. My smalls are below the large. I have a potential pivot stop out. Isn't it crazy if you just stop and vocalize? What do I see? What are the advantages that I have? You begin to trust it. There you go, Karis. You have a better chance of getting him during trading hours by sending an email. He's watching the markets just like you are. And it's going to be funny because he's going to get all excited about it. It's fun watching his brain work. I was in Sarasota for a week a couple weeks ago, and it's amazing when he starts thinking the stuff that he goes through. Pivot stop out's holding for now, isn't it? If price reaches support, where are the trigger lines? All my trigger lines remain above support, correct? So I can't go short yet. None of my trigger lines have broken this pivot stop out. I can't go long. Some think up, some down. Visually, it's easy to see. When everything agrees. There's a trader that's been with us a long time. He used the phrase, well, when it's obvious, take a trade. What he meant by that, when it's obvious, is all charts agree. All charts have strong triggers. All charts are in the same direction. Eventually, everyone will agree, and at that point, pray for a pullback. Guys, I think one of the best things you can do as a trader, especially as you learn the software, is talk through what you see. Vocalize what you see. If I'm just looking at this chart right now, I see a pivot stop out. I see a market that tried to push, couldn't make it. My trigger lines are below the large. My trend has changed. I've got 1, 2, 3, 4 slowdowns on my 5-1. To go long here would be financial suicide. But I also have support, and every one of my triggers is above it. Every one of my trigger lines remains above this area of support. To go short here would be fighting everything we know about termination conditions along with this one. If this area is going to hold, if this area is going to be a top, it starts here. The large triggers on your 5-1 will begin to roll. Your small will begin to come down. And then these large triggers are going to roll as well. And then if they do, then we know we have that top in place, at least until we get to the next key area. And guys, download that document John just put in there. Z, definitely take this one. This is when all triggers agree. That's not the one. Not sure why it keeps giving me different links. Now we have a pivot stop out, 2 divergences, small below the large are beginning to roll. There's a lot of next-gen sellers playing the if-then. Being patient, waiting for the best of the best. Guys, I'm going to take a few minutes, clear my throat, fill my water. When I get back, we will finish strong. New users, this last hour belongs to you. I say that every day, and people get shy. This last hour belongs to you. If you have a specific question, if there's something that you want to talk about, If there's something that you want to see, um, ideas going into the weekend to help you study, just let me know. And what I will do is I'll do my best to answer each and every one of your questions. And we'll set you off on a good path to the end of the week. I'll be back in just a minute, guys. All right, home stretch, guys. Here we go. What happened on that S&P while I was gone? Looks like we still have a pivot stop out at the top. That hasn't changed. Small triggers below the large triggers. Notice that they're beginning to roll, giving us an indication that the market may want to go down. Market pulls back. It's waning right here at this key area. Really looking for those trigger lines to break below it. Give us an indication that the market absolutely wants to go down. Our hurry up and wait scenario may be coming to an end, but not quite. As we come here, once again, directly into support, large triggers don't follow. Sellers push back right into that key area. Absolutely no trigger lines through it. Guys, the S&P is keeping us in a wonderful holding position right now. Shoulda, woulda, coulda. You know what, Ed? John's going to handle this one. Why trade freely, he says. No, you shoulda not. I'm going to put no, you shoulda not on a coffee mug or a bumper sticker. I like the way that sounds. Thank you, Ricky Bobby. Triggers up, triggers up, triggers up. Guys, that's not a short trade, no matter what it does after, right? Termination condition, doesn't matter what this 5-1's looking like right now, guys. That market is trying to teach you to break your rules. They're trying to bore you into submission. Look at this market. Up, side, 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 up, side, up, side, 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 up, side, side, side. Do we see a pattern? CL's knuckle busting. How many of you guys traded 10 years ago and wish you could have visually seen where those fights are going to take place? I have a wonderful advantage. The only thing that I've ever done trading is Nexgen. Guys, I thought everybody knew where Fibonacci support was. I thought everybody knew where resistance was. I thought everybody had that advantage. They don't. It is nothing like that. Have you ever done this? Googled chart reading for day trading and hit images. Am I the only one that has absolutely no idea what could possibly be going on here? How am I supposed to make decisions with this? So much easier with clearly defined areas. So much easier with momentum. Oh my gosh, Ron, it's like a different language to me. Nexgen felt like a different language for the first week. And it's amazing how you start to recognize that if everything revolves around that odds favorable momentum, things work out. When your charts agree, things work out. We have clearly defined areas inside of favorable large triggers. So when the market's doing, as Ron says, knuckle busting, scroll back. Look at how easy it can be if you take a moment, learn your trades, detect your opportunities, trade with the flow, right? How to Commit Financial Suicide by John Novak. This is one of my favorite books. Chapter 1, Warning Signs that Your Friends Are in Trouble. They're trading against strong triggers. We know what strong triggers are. Ed, your nickel's in the mail. Chapter 2, Warning Signs that Your Friends Are Not Paying Attention. They're trading directly into termination conditions. I think it's imperative that you think of your rules, guys, as advantages. The advantage of momentum, the advantage of a clear path, the advantage of an entry where the market is likely to continue. It's like a foot race. You want to be fast, you don't want anything in your way, and you don't want to start from 20 yards behind that starting line. Give yourself those advantages. Nexgen provides you those advantages. You just have to learn how to read your indicators. That's where I come in. How many triggers are below? Not a one. Unless your name is Zoltan and you're at the carnival. Guys, there's just no reason. And look what happened. I used to believe John Novak could predict the future. He would circle areas on his charts. He goes, this is where it's probably going to. He'd say the market's likely going up here, and I would be in a short trade, not following rules. And the market would go right to where he said, and I thought, gosh, how did he know that? And what I realized is that this sly devil has 28,500 pictures. He studied patterns for 20 years. I'm going to catch him in pictures, and I'm never going to catch him in years, but I'm going to get to where he's at one day. If you look at where you are today and compare it to where you are a month ago, where you were a month ago, it's probably day and night. Guys, it's the same thing on both charts. So I'm going to do this. Post a picture or a question. I'm on mic silence for a minute, guys.